Logistics YouTube channel, guys. So right here, guys, as you can see, this is a live trade that's going on. I'm going to share with you guys what we've been doing the last week. As you can see, this trade here is live, and this is where we are making profits on the trade. As you can see here on this trade, we're about $134 in profit, and it's still going, guys. This is a running trade. I'm going to explain to you why and how we made this trade. If you notice, guys, I've actually been taking these trades from this very point, guys. Okay, I've actually been taking these trades, like taking buy positions and taking sell positions as well from this point. I took a sell position at this level of the trade, somewhere around here. I held a sell position up to this point, which you have seen here on the screen, and then I started buying, holding here in bits. Some of them documented, some of them not. But guys, I'm going to show you what we've been doing on the market. Well, this is going to run for a couple of days all right, before I eventually close the trade in profit. So a very simple thing, guys. As you can see, I know your chart may not have this. This is my MLX IBT tool, which I developed to help me look at the market in simpler ways. You know, it's actually coded from different forms of analysis that I've used, different market structure, fundamental analysis and whatnot. Alright, so right here, guys, what you're going to notice is from the moment the price broke this structure, this particular structure here, from the moment the price broke this structure, which was supposed to be like from this point to this point. If you use this point to this point was supposed to be a lower high, right? But then the price broke this lower high, so it started moving to the upside. So because of this pull to the upside, guys, I had to change my cause and basis of analysis. All right, so guys, here's what I did. Okay, now if you use a Fibonacci tool and then you place from here where the price broke and you take it to the upside, this is what you're going to find. Okay, now you can see how price came and reacted just here, rejected this 61.8 and forming this pin bar here just above this level. So this was where I entered my trade, somewhere around here at the morning hour, you know, for confirmation. And right here, guys, if you look, the same thing too happened. Okay, the same thing happened here. Price came to this point and broke this. So this right here, as price is going up here, this right here is what? A new high, right? And we expect that within this point, within this level here to this level, within this range, that price is going to pull back, forming what? A lower high, right? And then trying to make its way further to the upside. Simple technical analysis, simple market structure analysis, a not complicated one. Okay, so right here, guys, as you can see, this is the exact thing, the same thing that happened, guys, and we use the same approach. Let me clean this. The same approach of what? Price breaking this structure, and then we use that Fibonacci tool again from this new low here to the new high. And what you can see here, guys, is simply price reacting on a higher time frame. Of course, this is the 4-hour time frame. Price reacting at the 38.0 level right here and giving us an extra confirmation, a reason to enter this trade to the upside. And then the price did the same thing here, broke this new high, the new high right here, and then gave us rise to use our Fibonacci tool one more time on this level, right? This level right here to this new one. And right here, guys, what you see here is very basic. Okay, you can notice that price just came here, reacted at between the 50 and the 61.8 fib level and gave us another confirmation, and we went further to the upside. Okay, we are going right here, as you can see. So I'm on this trade, as you can see, live here, guys, and this is exactly how we scan the market. But needless, I will still do a recap of the intraday perspective. Okay, so let's look at what we have on the intraday. That's the normal stuff for day traders, how you can catch your 20 pips and thereabout and get off the market. Okay, so right here, guys, looking at the 15 minutes chart time frame. Okay, And let me scan this a little bit so that we can see the market from a broader perspective. Okay, so I'm just going to start from here. Okay, I'm not going to take it too far. All right, so this content has to be as short as possible. All right, so right here I'm in the trade. I need to get my eyes off the market as well, so I don't start getting some mixed feelings. Okay, so right here guys, on the normal content which you know of, our aim here is actually to take 20 pips off the market. For some time I've not really been doing this because I've been holding on this trade and following the market structure and all, but I'm still going to share some light here based on what we've been doing. Okay, based on what we've been doing. All right, so as you guys know, there are things I take cognizance of. All right, the time of day. So I want to enter the market at the beginning of the London session, a few minutes after them, and then I also want to take cognizance of what the market did and the Tokyo section, whether the market made a downtrend or whether the market actually made an uptrend in the Tokyo section, so that as at the time where I'm entering the London section, I'm looking at either looking at price coming from the high side. If I catch the market at this London session, that means I want to catch a corrective move. Okay, if I catch the price at maybe this level at that time, that means I want to actually trade a continuation, okay, in the direction. So that's just the simple idea. Then again, I also want to take note of what I've mentioned. The time here, the time frame is 15 minutes time frame. I also want to take cognizance of what trading session, which I told you I like trading that the beginning of the London section or the beginning of what the New York trading section. Okay, now if that's what we want to do, guys, let's take a look at this market. I also make use of my Fibonacci tool, very important. So guys, if we look at this market, we can see here that before, from the Tokyo, during the Tokyo section, all we had was price making a move to the downside. Okay, price making a move to the downside. Okay, so what do I want to look here, guys? What do I want to trade? I want to trade. Okay, price here made a downtrend, and then price also went up. Okay, so at the beginning of the London session, what you can see here is what at this point I should be trading a continuation to the downside, because price has made what, coming from the high, it came here to this low, and price had already made a lower high, so I want to trade a continuation. Okay, so that's the concept I want to be trading with. So at this point, guys, what I simply do is to use my Fibonacci tool from the highest point of the Tokyo section to the lowest point before the beginning of the London session. As you can see here, price is around the 61.8 fib level, so this is exactly where you take your trade, and you just come down here to the 0.0, and right here, as you can see, 21 pips in the bag. Okay, and then I do the same thing too. Once I get this result, I don't want to bother the market further. I just leave it for that day. Okay, now when we go on to the next day, what we notice here was that price was making a high to the upside, all right, before the beginning of the London session. All right, so right here the London session began here. Okay, so what do you want to trade here, guys? I want to trade a corrective move. Leave what you see in the market here. I want to trade a corrective move. Okay, now I want to assume that the market will be coming to the downside. But guys, if you follow that concept right here, this is what you'll notice. Definitely you would have been taken out of the market, all right, but actually this was kind of the target at one point, level 38.0. okay, which is fine to lose some trade. So because of what happened here, guys, I would trade the market further, right? I will try to trade the New York section. Okay, now I'm trading the New York section, guys. What will I notice? At this point right here, you can see that we are at the 38.0 fib level, which is a sensitive one. Okay, and then what I want to do at this point right here is the 38.08 is actually a support level, so I want to see the best that the market will come up with. So this will make me to hold this trade from here and actually set my stop loss somewhere maybe at the 61.8 and target here. Although it didn't hit profit that day, but it got to the market the next day, which you can see here. So the target was actually hit the next day, but let's say this day was just a bad day, which is fine too as well. Okay, now looking at the day, which is the current day, guys, we have the same pattern. Price right here from the downside and the highest point before the London session. Okay, now what do you have here when you look at the market? Okay, when you look at the market here, what do you have here? You have a very simple, uncomplicated situation. All right, you come here, we see this move, we see the beginning of the London section sitting just right here at the 61.8, trying to make it to the upside. As you can see, this is the basis, the support level, whatnot. So all I do here is just to take my trade to the upside, and I get this much, 14 pips if you want to further, but then I will just target 14, or in most cases just target my 20 pips right here, and I'm in profit. All right, so if this makes sense to you guys, thank you very much. I want to see you subscribing to this channel. If this is your first time, this is what we do. We trade to make profit, guys, and we trade this for as much as we can. All right, so guys, if you like the results, I really want to get your thoughts. I want you to share your thoughts in the comment section as we trade forex in Millionaire Logistics. Thank you.